Gary Wagner here, just after 10 o'clock in Honolulu, 5 o'clock in New York on Friday. Finally, happy Aloha Friday, as we say on the islands, 25th of October 2013, and this is the Daily Report for Gold and Silver, our weekend review. What an exceptional week we have seen in the precious metals markets, both silver and gold trading higher on the week. However, on the day, we have gold up moderately higher, up about $5, and silver off about 17 cents on the day. First to gold, 1351.40. Current print on the screen, continuous COMEX contract, as I said, puts it up roughly $5 on the day, the low of 36.20 and the high 57.60. Silver is off on the day, off about 15 to 17 cents, 22.53. Also continuous contract, low 22.19, high 22.81. We'll speak about silver and our current trade towards the end of the show. Now, we did recommend initializing long positions in both gold and silver. I believe we did that on Wednesday. And what I was looking at is as follows. We have had quite a nice spike as this market has come off the lows at 1247. However, we had been in this tremendously defined downtrend as we saw the market move from about 1435 down to 1245. Roughly a $200 move. We saw a base form, and of course we had this big spike that came in and really took the market roughly to 1320. Now, once the market actually moved to 1320, we began to get our first pieces of the puzzle that we could be witnessing a reversal, a key reversal in the market moving back up. Because think of it this way, up until that point, you could characterize the market as we watched it go down. Here's a low, it comes and makes a high, but when we compare this high to a prior high, we're getting a lower high, we're also getting a lower low. Market then comes down, makes a lower low, compare the high, a lower high, and again, a lower low. But here is where we notice something might be changing. As the market came back up, this being the former high right here, at the point in which it broke above this high, you can see that there was some congestion. That's really when it was evident to me that we could be seeing the market turning around, because once it's in a position where it starts to make higher highs, we look for the higher lows. But up until then, we really can't implement any kind of a long strategy in the market. The other thing that we noticed and that we talked about throughout the week was that what we were getting in terms of the way the market was moving up was quite nice, because we would get these tremendous spikes or ascents in price. We would then get a short period of consolidation. That would be followed by another spike, a little bit of consolidation, and then a spike. That is what really led us to believe that there was a good opportunity. Now, we're in at 1332 in that area. Market's trading at 51. We'll talk about raising the stops. We'll talk about resistance areas, all on today's daily report. Although we are trading off of the highs today, we are trading only slightly off the highs. I believe we said the high was 56, but I don't believe that we've really run into real resistance yet. And if the market continues on this uptrend next week, I'll talk about the different resistance levels I think we might encounter at that point. But right now, we're kind of in midstream in terms of any kind of major resistance. First, to support, when the market stair-stepped up, and that's the best way to characterize it, we talked about a resistance area between 1331 and 1335. It absolutely took that resistance area out. That's a 38% retracement level, and of course the retracement level covers this entire span or this last rally from, call it 1181 to 1435, and you get this one little band right here. And when we look at the band, we can see historically where there was some activity. Absolute resistance in this area. You can see more resistance right in here until it broke above. And look at the spike that happened when it did break above that. right in here, there's really nothing that we can address, but you can see some resistance right in here as the market trades below, but kind of gets trapped right up in here. And now we have absolutely taken this out, and my sense is that 1431 to 1435 should absolutely become support in the market. Now, that's where we see some supportive activity, but in terms of resistance, the fact that we're over 1340 is a good sign. I think that we'll find resistance at around 1362 and then again at 1373. So I believe that we have this band of resistance should the market continue to track higher next week. This is where I would look to encounter a little bit of upside resistance pressure and maybe cause the market to backfill a little bit. But right now, I think that we've got pretty clean sailing, at least up until about 1360, 1362, right in that area. In terms of resistance, there is another thing that we absolutely need to look at, and that is just straightforward trend analysis, this upper level resistance line. Now, this resistance line has simply been put in by taking the highs of the market as the market moved down. You had consistently sets of lower highs, and then simply carrying it forward. We talked about the fact that when the market bottomed at 1181 and moved up, this was a tremendous rally. We made great money on this particular rally here, but it failed to overcome or failed to take out this high as it moved up to the resistance line. That proved to be an ultimate level it couldn't break through. Market comes back down, but when the market comes back down, it does something that's a real bullish indicator, and that is that we now have a series of higher lows. So we had lower highs going in, higher lows, and now as we approach the apex of this triangle, what we're really seeing is it having the possibility next week of once again testing this resistance area, and we want to see, can it make it through and plow through, or will it bounce off and then just simply continue lower? Because if we get a lower high here, in other words, a market comes up to this line, it falls into really, really strong resistance and goes lower, it's obvious that we're just still maintaining a bear market count and a bear market scenario, even with these rallies. So as far as I'm concerned, this real test, which could happen next week or the following week, to me is going to be critical in terms of the outcome on a technical basis. So what is our recommendation for our current gold trade and our silver trade in terms of stops? We talked about our upside targets throughout the week, and our basic upside target initially is going to be between 60 and 70, and that's really to see how it reacts if and when this market actually moves towards this compression triangle that we talked about, because as you can quite easily see, we are very, very close to that upper end of this resistance line here. Currently, we have not trailed our stops up, and we have our initial stop that we placed when we took the trade on. Of course, we entered the market at roughly 32. We placed our stop just under 1309, and that was to make sure that if the market did turn around, it would have to break through this little level of support here. Well, genuinely, we saw the market track up and then find support, really, as we talked about at the beginning of the show, roughly at 1330. So one suggestion that I put forward for your consideration is you can go ahead and trail your stop under 1330 to account for this particular base or level of support that has entered the market as we go into the close of this trading week. Now, as far as silver goes and our current silver trade, we are in roughly at this point a little bit higher than we're currently trading. 22.55 is where the market appears to have closed for the week. And here's what I'm looking at in silver. Unlike gold, we haven't seen that substantial rise. We have, though, formed not only support levels, but I think that we need to hold above really 22.44. We do have an effective close above that. This, of course, is a standard candlestick weekly chart. You can see that the high that it hit was just at around $23 per ounce, just shy of that before kind of backing down on the week. But we get a far different picture when we look at our daily charts, because on our daily charts, what we're seeing is although we had higher posting in terms of prices on the week, the beginning of the week is really where we saw all the action. As this market moved up, we had 1, 2, 3, 4 days in which we had huge price spikes. One day was a green candle. It closed higher, but really a doji candle. But you can really see over the last 3 or 4 days, we've hit this kind of wall of resistance right in here. And as I said, that is really where current resistance falls, right at around 23. Support 22.48. But my sense is if we see gold break through that resistance line we've been speaking about, we'll probably see silver come and test the mid 23s to the low $23 per ounce. If we see gold back off, we will probably see silver back off with it. And the key area, once again, to look at is 22.50, 22.45, the 38% retracement level in silver. This has been Gary Wagner, wishing you, as always, good trading. Have a great weekend. We'll talk to you on Monday for another daily update and review. Bye-bye.